Hello, everyone, and welcome back to the Property Hustler Show. My name is Andrew, and today Ping and I are joined by Martin May. He is a serial real estate investing and business entrepreneur. He quickly became the largest wholesaler in New Brunswick and pivoted into the U.S. self-storage market. In this podcast, we're going to be covering a lot about his journey into the self-storage industry, some of the mistakes and adjustments that he had to make being a real estate investor, the focus on how important it is to have revenue streams today, as well as the significance of his business philosophy. So, Martin, great to have you on the show.
Thank you so much, Andrew. Quite an introduction there.
Yeah, so Martin, how have you been? Yeah, what have you been doing lately?
Great to see the both of you. It's been an interesting time. It's been, some really tough times in my life recently, but I recently separated from my partner, Lynn. We made the pivot from doing wholesaling, from doing residential real estate in New Brunswick, and we pivoted to doing commercial real estate, so self-storage in the US. It sounds great on paper, and it sounds like, it's the natural progression of what we're supposed to do. And I'm very much still on that journey myself. But what we really neglected was the fact that when we were in New Brunswick, we had the short-term cash-making strategy. So that was wholesaling, flipping. We're doing a lot of short-term rentals as well. Lynn was also a broker. So we had a lot of short-term income coming in. And we were also focused on, building that long-term wealth by keeping properties, by doing BRRRRs, by doing joint ventures on these bigger deals. It was a very well thought out, very comprehensive strategy that comprised of making money on the short term, but also building that long-term wealth. And we could make a lot of moves. We were just aggressively growing. But when we switched to commercial real estate, we were super excited because self-storage just makes so much sense to us. And I'll dive deeper after this pointer as well. But when you're doing commercial real estate, it's usually a way longer project, right? Like for the deal that we're doing in Texas, capital raising process, the securities document setup, the PPM setup, all of that, it took about 10 months, the entire process. For those 10 months, because we're 100% focused on that and we cut off everything cold turkey, we had zero money coming in, guys. We had to sell a property in order to sustain the lifestyle, which wasn't even that glamorous, right? Like we were just, living in the rental and we were trying to make ends meet and we're trying to make this deal happen. But it created a lot of pressure, created a lot of stress. Essentially, all of our eggs were in one basket and there were no diversification of any income on the short term. So we were just burning through cash every single month leading up to the end of this project. In the end, because of the interest rate, we actually couldn't even get a deal to pencil out. So we essentially drained a bunch of money and there was no money coming in. That created a lot of stress, in my head, that created a lot of tension between my marriage. And I feel like that's the kind of stuff people don't really talk about, right? Like people are jumping from, flipping properties to doing even multifamily, bigger multifamily stuff. Yeah, that's what's recently been happening. It's been an eye-opening experience. And I just realized you have to worry about how to pay for your groceries. You can't go to the grocery store with your equity, right? So that was a huge learning process for me.
By the way, I really appreciate you sharing your personal experience, especially this is being the most recent one, right? And recent challenge. Everybody talk about the wins. Nobody really talk about the struggles in between. Now, question here is how are you currently overcoming this? Because I remember in our previous conversation, you mentioned that getting into the self-storage space, number one, is very exciting. There's a lot more money to be made long term. When you're looking at different asset classes, it still makes sense. And I remember I asked you the same questions, and you were like, "Oh, well, you know what? The immediate income will be coming from the development fee." Is that still the case, or how are you pivoting or overcoming the current financial stress?
I feel like that model, the development fee, the acquisition fee, the syndicators and the GPs, they usually charge a lot of fees to make up for the cost, right? But for someone in my position, my business partner and I, we actually decided to keep our projects, on a smaller scale, to really build that track record, to really get our investors to get accustomed to this new asset type, to this new market first. So that's why we're actually, not really charging as much. We're charging lower than industry average when it comes to the acquisition fees, the development fees. So that's part of the revenue, but we don't want to bank on that, right? I feel like the mentality I had, it just wasn't the right one. I couldn't just bank on charging a development fee purely as a business. really just a cherry on top to cover your time, to cover the expenses. But to really, make some serious revenue on the short term, I'm currently looking at, other revenue streams. So I'm looking at getting into purchasing a business, existing business that's been around for 10 plus years, that's proven to be relatively recession resistant. So just like self-storage, I'm looking at, car wash businesses, laundromat businesses, shipping supply businesses, or any niche businesses that's complementary to what I'm doing in commercial real estate. So I'm looking at paving, I'm looking at, roofing, I'm looking at HVAC companies. When you're buying a business, you're looking at, EBITDA, you're looking at multiplier of the EBITDA. So it works like a cap rate, right? But essentially the cap rates are a lot higher. And what that means is when a cap rate is really high, that means your cash flow is a lot more substantial in the short term. So that's why, people say millionaires own real estate, but billionaires own businesses, right? So that's why I think if you have a T4 or a full-time income, that's great. You can invest in real estate, part-time or passively. But if you don't, you need to figure out, how you can have an active business, and real estate should be a part of it. You shouldn't really bank on charging a fee, and that's your only revenue source.
That's a pretty amazing. If I can ask a question here, would you then say that the adjustment point may be that people, when they're looking to maybe even quit their jobs, it's not that they should be aiming in the short term to use real estate to quit their jobs, but they should be using business to replace their active income through work and then use that to further invest into real estate?
Me personally, I went to business school, so I was climbing that corporate ladder. I was, very gung-ho about, making it in the corporate world. I quit because I wanted to do wholesaling in New Brunswick, so real estate wholesaling. And we were quite successful at it. We created a 7-figure business. We created, a bunch of deal flow. We hired a bunch of employees. But when you're doing real estate wholesaling, first of all, it's extremely dependent on market cycles, right? It works really well when you're in the market where it's extremely competitive for the buyers. You essentially are creating a deal flow off market for people who are, savvy investors who are looking for off-market deals. Sure, in that market cycle, it works great. But as we're heading into a recession when the market is slowing down, you can find deals on the market. You can go on realtor.com, lowball any broker, lowball any seller, and you can literally make the deals yourself, right? Like the value of the wholesaler diminishes. I didn't know that when I started doing that 3 years ago. So honestly, in hindsight, I don't think it was a good call for me to quit my job to get into wholesaling real estate, because that's not really a business that's sustainable. And that's proven to me that it's not. Secondly, the reason it's not sustainable is the fact that New Brunswick banned it. If you're listening to this and you're working in New Brunswick, you're trying to do wholesaling or you're trying to buy from a wholesaler, it's illegal right now. You would get in trouble with the Financial Consumer Board of New Brunswick, FCMB. So they literally banned it in New Brunswick. We're going to see more of that happening throughout the country. So if you know of anyone, that's thinking of quitting their job to do wholesaling full time, while I appreciate the hustle, I've been through that hustle. I just don't think that's a sustainable business to get into. But instead, Andrew, to your point, I definitely think, you need to replace your active income, sure, with a T4, with, passive real estate from like multifamily. That sounds great. But what happens when something breaks, right? You can't really budget for human errors, especially dealing with human tenants, right? So I do think a winning strategy, at least for 2023, like November 2023, March, May, I think the winning strategy is to have an active business. That makes sense, that it's not a job, that you can create a system around it, that you can have a business, you have an SOP, and you have a system that's running it for you, right? And you're optimizing it every single week, and you're looking at the KPIs, you're trying to grow it. And you also have real estate on the side. That's going to help with your depreciation benefits, as a business owner. And that's also going to create that long-term wealth for you, right?
Yeah. By the way, Martin, every time I talk to you about business, right? You're very, what's the right word? Calculated? Maybe that's not the right word, but you're very sharp with your decision. You always look at things from a micro and micro level, and obviously try to figure out what the blue ocean strategy, what's scalable, what's sustainable. So I really love a lot about your current business, even like a suggestion or like for yourself, right? We always look into monetization in real estate first, and then we talk about investing in real estate, because if you're unable to monetize it as a service provider or building the necessary service fee as an active investor, and you're waiting for that equity play, a lot of people own 7 to 8 properties and they still have a full-time job, right? And that to us is crazy because when we first switched into this industry, we already knew that there was an opportunity cost. The cash flow coming from our rental properties we were scared to spend them because, like what you said, what happens if the roof needs to be replaced, HVAC goes off, right? Though it will literally wipe out all of our cash flow. So the current adjustment that you're making right now is that you're getting into more like a boring type of business to generate that kind of cash flow. It's kind of like what Cody Sanchez, like I don't know if you heard of her, but she's heavily promoting the business acquisition for that part. Is there any synergy with what you're doing with a self-storage space? Because I'm sure you're not abandoning, like you shouldn't be abandoning that, right? After spending so much time developing the business model and all that stuff. How do you actually create create that synergy with your long-term strategy versus your current short-term strategy?
Yeah, no, I'm glad you brought out her name, Cody Sanchez. If the listeners haven't heard of her, make sure you check out her YouTube channel, get on her newsletter. I'm getting a lot of value from them, so I love Cody. Self-storage, that's always going to be my play, right? That's going to be it when it comes to real estate for me, right? What I love about it, it's proven to be one of the most recession-resistant commercial real estate asset types when it comes to real estate. But as a business, it also has one of the lowest default rates. So it's literally, a winning combination, right? In the business world, but also in the real estate world. But when it comes to choosing a business, the reason why, Cody is all about boring businesses is nowadays, I feel like the Gen Zs, the millennials, like our generation, we're looking at, something exciting to do. We're trying to work on the hottest new product, right? And we're trying to start a business, we're trying to, have a groundbreaking idea. But meanwhile, all the baby boomers have been successful. They've been running their business for 10 plus years, or 20 plus years, and they're trying to get out of it. They're trying to retire. They're trying to pass it on to kids. But their kids are like, no, I have this really cool job at Microsoft. I have this really cool job at OpenAI, and I don't want to take your boring car wash business, right? So that creates an opportunity, right? That creates that blue ocean strategy that I love so much. Is all these baby boomers are retiring. They have no one to pass on their legacy to. And most of the businesses that get listed on Biz by Sell, that get listed on the open market, they don't even end up getting sold, right? People are not looking for those boring businesses. They feel like they're not interesting, they're not sexy enough. So that's where I see, a really interesting opportunity. And I started, my wholesaling business. Granted, it wasn't anything that fancy, anyone can get into wholesaling, but the risk of starting a new business compared to buying a system, buying a product or a service provider that's already been in business, that has a proven track record of 8-10 plus years, right? That to me, it's a lot safer as an investment. That to me, it's a lot safer as a bet compared to getting into a brand new product, getting into a brand new business and starting from the ground up. So that's where you could potentially come in, usually, doing a lot of business development, doing a lot of consolidation of the SOPs, of the systems. A lot of these service providers, they don't even have an online presence, right? You can't even find them on Google. A lot of them has been done through word of mouth, but they've been extremely successful. So that's what I see being a very interesting opportunity that you can tackle when it comes to buying businesses to really meet that short-term cash flow demand.
No, I love it. Two things that I just want to kind of summarize it, right? Blue ocean sometimes happens when there's not enough attention to that specific asset class or business. And what you're describing right now, wholesaling, I do actually believe that 3 to 5 years ago, that was a blue ocean to a lot of people, right? Right timing, right market timing, right strategy. Not a lot of people pay attention to that. So I like even though you're saying that it wasn't a sexy business, it's not sexy anymore, but it was pretty sexy back then, right? And right now with a boring business, like what you mentioned, the attention is simply not there. Supply is still there. There's not enough demand, and that's where you can kind of come in and ask for the seller financing. So you kind of mentioned about the creative financing, seller financing on that. Can we talk about that a little bit? Because obviously that's what everybody's question is going to be. Doesn't matter if it comes with a real estate acquisition or business acquisition. How do you come up with the capital?
So first of all, if you're doing this in the US, there's a lot of government funded programs such as SBA financing, right? So small business administration financing. Usually you can get away with 10% down, which is absolutely amazing. What's really cool about this is that's when you really see which businesses are considered to be relatively safer, right? Because there's so many businesses that SBA financing doesn't even touch, right? When it comes to, startups that were built, within the last 2 years where their financials are all fucked up, or if you're looking at a restaurant and looking to purchase a restaurant concept, SBA financing is not going to touch that, right?
Right.
But SBA financing, they love self-storage. They love, laundromats, right? Because it's a business model that's easy to understand, that's easy to get. That literally shows you small business administration. They think anyone can run that business, basically. So I think that's a really good sign, right? So I think a very straightforward way to identify what kind of business you want to get into is to look at what kind of businesses are approved for SBA financing, and where I come up with the capital. So first of all, between my ex-partner and I, we have a few properties in New Brunswick, in Quebec. So we actually sold a few of them, the ones that we have essentially a lot of headaches with. So we were sitting on some cash, we can make some moves. But at the same time, it's just like a joint venture in real estate. You can have a financial partner buying a business as well, right? You'll be 50-50 owners, or however we want to structure up the deal. But when it comes to, creative financing directly with the seller, that's really where you can really get creative, right? Like you have to understand, just like in real estate, what does the seller want? Does the seller want a monthly cash flow, to fund the retirement? Or do they want a huge injection amount of cash because they're trying to reallocate that capital towards another business venture? So every deal that I'm proposing, every deal that I'm trying to structure, there's always some sort of seller financing component to it, just so I can see if I can get away, just doing it directly with the seller by themselves. If I cannot, that's where I consider, bringing in the partner. There's also the benefit of getting an American partner involved, right? I'm friends with this gentleman from Alaska. He has a bunch of HVAC companies, right? So he's always flipped HVAC companies that's doing around 500 to 800K per year, bringing all the way up to around $3 to $5 million per year, and then sell it to a private equity group. That's what he's been doing for over 6 years. So I'm partnering up with him to look for opportunities in the HVAC space. And that's going to really help me with the financing. That's going to help me with the negotiation. That's going to help me with the operations side as well, right? So it's all about obviously like who you know, and that's why Ping, we're talking about this, right? Like I have been going to a lot of non-real estate events. That serves me in a lot of ways, right? Like as some of you know, I moved to Vegas, a year ago, with the hope that Vegas is the hub. Whether you like it or not, you likely will have to go to Vegas like at least once a year for a trade show, for a friend's bachelor party, for whatever. This is where the world comes to meet, to exchange ideas, to exchange new information, to exchange money, or to just simply gamble, to have a good time. So I decided to be based out of Vegas, so it's easier for me to meet people, easier for me to raise money, easier for me to go network, right? I will go to a lot of non-real estate events and talk about real estate. I will go to different industry events, talk to business owners, and talk about how they can leverage commercial real estate to get depreciation benefits. And I will go to real estate events and talk about how shitty multifamily is and how great self-storage is. So again, it's that blue ocean strategy. It's right, finding where you can be considered, the go-to guy for what you're doing. If you're a flipper or a wholesaler, you just go to a bunch of wholesaler or flipping events. Nobody is going to give you money if you're going to a wholesaler event, right? You have to go to events where you can solve an actual problem, where there's that knowledge arbitrage. So I think Vegas is fantastic for that. So I tend to meet a lot of people, and that's also where I'm getting all these random ideas. You might be thinking, Martin, what are you talking about? Why are you looking to buy a business now? That's because, I'm surrounding myself with people that I've seen those people, right? That are making active income. I'm part of the local chamber of commerce. Those are all business owners. And to them, real estate is really just something on the passive side, right? And they own a bunch of real estate, don't get me wrong, but they don't treat that as a full-time venture, right? They just see that being an add-on. They see that as a depreciation. They see that being a way to write off some of their business expenses.
I have a couple. You actually have a ton of questions, if I can, based off of like what you said. I'm gonna circle back to some of the initial things that you were saying, because I want to really ask some questions. I think people who might want to start adapting some of the things you're talking about will want to consider. So you seem like somebody who, if you're buying a business, you want to buy something that you're not too involved in, right? Relatively simple, straightforward stuff. And when people are evaluating businesses, the part about financing a business and seeing if it's financeable, being an indicator as to whether this is a good business that anybody can run, I think that's gold. That is key. So you want to look at whether or not it's financeable. In terms of having versatility of what you're looking for, are you looking for businesses that require like how much improvement, kind of like fixer up houses? You're going to buy a house, you finance it, you're going to put some capital aside to fix it up. Are you also looking for businesses that you can get at a bargain and you can inject capital into a problem you understand so that you can improve it and then streamline it? Or are you looking for turnkey?
Yeah, this is really good, guys. Ping and Andrew, you guys have really good questions going, so I'm really enjoying this. I'm gonna answer that question with self-storage because that's what I know best, and that's a business, but it happens to be real estate based as well, right? But Andrew, to answer your question, my first deal or my first attempted business purchase was this ground up development deal in Texas that we're looking to do. It was going to be a $13.7 million project. We were going to buy the land that was already zoned for self-storage. We were planning to work with the architects, the consultants, to build a ground up development, a brand new Class A facility, and have one of the REITs, CubeSmart, Real Estate Investment Trust, to manage it for us, right? So it was a very fleshed out business plan. But what we didn't consider properly was the fact that how dependent we were on interest rates and on the lease up schedule, right? We essentially were having to raise a bunch of money on the equity side and also get the debt side. So we have to pay that debt service on a monthly basis. We also have to take care of our investors. But where's the money going to come from? It's going to come from the rental income, right? So with the business plan of doing a development in a high interest rate environment like we have today, that means it's going to take us years to reach that break-even point. It's going to take us a couple of years until we can have enough revenue, right? From this brand new facility, we need to rent out enough self-storage units to be able to pay for all the expenses and the debt service. Right? So it went from 7.5 to 9.5. That's honestly what killed the deal for us when it comes to interest rate. It was going to take us around 3.5 years to break even. But as soon as it got to 9.5, it was going to take us around 7 years to break even. So for 7 years, we're not able to make any money. We're actually losing money every single month. And we didn't want to take that risk, right? And who knows what's going to happen to the interest rate, a few months or a few years down the line. And we realized, okay, development, it really makes sense a couple of years ago when the interest rate was super low, right? Self-storage was having some of the best years in its asset cycle from 2020 to 2022. The rates were at an all-time high, the occupancy were at an all-time high, and the interest rate were at an all-time low. So that's why you see so many people flooding into self-storage. They were building brand new facilities and they were doing quite well. So from that experience, right, realize, okay, right now to really win a big, let's focus on, the lower hanging fruit, right? Like we don't want to put ourselves in a cash flow negative position for that long, especially when we're dealing with investors' money. So that's why we shifted our strategy from doing ground up development to buying a value add. So Andrew, that's basically what you were proposing. What kind of businesses, what kind of self-storage businesses are we looking for when it comes to value add? So when it comes to self-storage, just like any other business, you're usually wanting to buy from a mom and pop operator that's really, underperforming it, that's really not managing it very well. So some of the signs for that is if they're running at 100% occupancy, that usually means they're undercharging, right? The industry average is around 82 to 92%. That's usually the occupancy level you want to hit. You want to use dynamic pricing. You want to have enough online presence to really run your rates efficiently so you can capitalize the most out of your facility. If you can't even find them online, there's no websites, they're not even on Google, that's a really good sign as well, right? That means they're putting zero effort into marketing. So as soon as you take over, you can build a website and you're potentially able to tap into a lot more of the market than what you could do before. Another clear indicator is if there's room for expansion, but the mom and pop operators, they're not really taking full advantage of that, right? So if there's already a facility and there's extra room in the back and they're just using it for parking a bunch of junk cars, well, guess what? You can get a lot more revenue per square foot if you're using it for traditional self-storage compared to parking. So these are some of the clear signs where you can easily add value to a facility / to a business, and therefore increasing the bottom line, increasing the value of your property, and you can go back to the bank and refinance, just like how you can burn a multifamily building.
Okay, just to complete that, and sorry, Peng, I know you're burning with questions, but just to complete that thought process, if we were to put any tangible numbers to this example, like, is there a market standard? Like, if anybody's looking at buying a business and it's just somebody be thinking about it as real estate, I know the sky's the limit. But let's just say somebody who's pivoting from the Canadian real estate market, the way that it is, and they're trying to do something simple like leverage a HELOC, leverage some kind of a financial asset, but it's not going to be too crazy. Like, we're not buying like a multi-million-dollar business. We're buying like reasonable stuff that the everyday, real estate investor may consume. Like, is there a price point that you think that people should be hitting for a small business with minor improvements that's easy to do? Like, should they be operating $100,000, $200,000, $300,000 businesses, 50,000?
Yeah, I'm so happy you asked that. I would say every business is a little different. And what's interesting, guys, is when it comes to self-storage, if you buy a facility that's a little too small, right? If you buy a facility that's, only got like 70 units to 100 units, all the way up to around, I would say around 150 units, around 15, 20,000 net rentable square foot of self-storage. Anything below that, you're going to have a hard time affording to pay a property manager because the revenue that you're getting from the facility, it's honestly just too small. You're likely going to have to self-manage it, right? So you're really buying yourself another headache or another job. That's not really a system. You're not buying a system. You're buying a facility where you can barely pay for the expenses and you have to manage it yourself, right? So you can leverage SBA financing, can leverage real estate, self-storage financing, where you can leverage seller financing as well, right? So I'll say, that translates into other businesses as well. When I'm looking for, other businesses like paving, shipping supplies, I usually ask them, hey, like, what type of employees do you have, right? Yesterday, I was actually talking to this business broker about, talking about niche businesses. It was about geotech engineering. It was a geotech engineering business. It was this engineer that's been doing this for the past 30 years in Vegas, Nevada. He was doing quite well, didn't need a website, only word of mouth, commercial, residential projects. And he told me, yeah, there are 3 employees. I was like, oh, that sounds pretty promising. When I dive deeper into it, 2 of them are VAs. One of them is just administrative assistant. So that business is really centered around this guy, right? This engineer. So that means if I take it over, I'm gonna have to run the damn thing, right? Like I'm not an engineer. Think about, where you can add value to a business like that. If you want to be the owner operator, nothing wrong with that, right? If you're willing to get your hands dirty and really get in there, get into the trenches, by all means, right? But for that geotech example, like I'm not an engineer, I wouldn't be able to do that, right? Where I would shine is I would be able to, build a process where, build the marketing, do the business development, where really target, a new type of clientele that they weren't thinking of before. But I need the engineers to do it, right? Another classic example, if you're looking to buy a car mechanic shop, my value proposition would be, if I were to acquire a car mechanic shop that's been self-run, I'm not going to be a mechanic, right? I need mechanics to run it. But I might be thinking of, oh, they're currently only serving this part of the city, but I can get in contact with the insurance brokers where, like the top insurance underwriters, and I will propose to them, hey, like, whenever you have an accident, here's a referral code for you so you can get a kickback where you can refer all of your accident clients into our mechanic shop, right? So that's the kind of value I can bring to the table instead of just actually like doing the work myself. So because of that, I'm always looking for businesses, when it comes to self-storage, I need a certain size. When it comes to businesses, I need a certain, team members already in place. And I need to know that they're going to stay in the business. They're not just going to leave with the seller, right?
Yeah, Ping, we kind of conclude this because I feel like you said
for it.
so much good stuff there. Just to conclude this, because this is what I'm understanding here for our listeners. It sounds like if you're going to make any adjustments, you're going to pivot. You've already identified that real estate investors, a lot of them, they're having today cash flow problems. They're having revenue problems today because there's a lot of long-term prospects that we invest in, but none of them are going to put food on the table today. So if they're looking at pivoting into something else, everybody's always seemed a little bit concerned about getting distracted by shiny objects, as they say. However, what you're talking about, it sounds really good. It doesn't sound to me so much like a completely offside shiny object, because you've actually kept your what you're doing in line with your business philosophy. People who are real estate investors, if you are a passive real estate investor and somebody who doesn't want to get into the trenches too much, you should probably maintain that philosophy into your business acquisitions. It's still investing, right? And you're not buying yourself a job. People who are maybe, let's say, house flippers and get boots on the ground, they might end up saying, okay, I'm going to buy a business and I'm also going to operate, and they end up stretching themselves too thin. So as long as you maintain your philosophies on how you want to invest, and this is really depending on you reflecting on yourself properly, I feel like this is an excellent adjustment for real estate investors who, let's face it, everybody's having the cash flow problem right now. Finances are thin. So find something that you can optimize and that is in line with your nature. So I think if that's what you're saying, that's what I got out of this. It sounds like the best way to go.
Yeah. And the best part is that your positioning is very clear. You know exactly where you can add value, right? The truth is you never want to be in the position to be working in the business. So you're looking for a team, a system, a process in place, like a basic process where you can come in here by doing the business expansion, right? For them doing the social media to do the lead gen. All those stuff is more like a working on the business type of thing. So I like your current positioning. There's a couple of things I want to ask before we jump off this topic. Is there any turnaround time for you to be fixing up these business before you sell it to the next private equity companies? What's the multiplier and what's the immediate cash flow that you can expect?
So, again, I would love to use self-storage as an example, right? Just because it's, easy to understand. Usually when you're buying, existing self-storage business slash a facility, you're trying to push it based on the interest rate. So right now I'm making offers at around a 9 to 10 cap, right? For a traditional self-storage, boat and RV facilities, I'm usually shooting for above 10 cap, depending on the location, depending on the condition of the facility, of course. But when you're, making those really aggressive offers, what I'm trying to do, I'm trying to have that immediate cash flow from day one. So I'm able to, pay the investors. I'm able to really show that, hey, this asset is going to be fine, even if we did nothing to it, right? You can have all the business plan you want, but in the current today's environment, you really gotta, be careful with making those bold assumptions, right? Back in 2020, 2021, you can make bold assumptions all you want, right? Anyone and their grandmothers are investing to real estate and everyone came up on top. Everyone looks like geniuses, right? But in the environment like today, you got to be less bold, right? So that's why, we're making these really aggressive offers because we're trying to make sure it cash flows from day one. But any value add that we do is really an extension of that. It's really a huge improvement on top of the bottom line, right? So if we're building a small expansion and we're introducing marketing, if we're adjusting the rental rates, adjusting it to market levels, and bringing it up to what the competitors are charging, or even slightly under what the competitors are charging, that's how we can really increase the value of the property. So usually for self-storage, we structure the deal to be anywhere from 3 to 7 years. That's like the length of the project. And that's usually the payback time for our investors as well, right? So for commercial real estate, it's very common to see projects, anywhere from 3 to 5 to 7 years. I will say that's the life cycle of the self-storage deals that we want to do to stabilize it, right? There's also a huge consideration when it comes to what type of investors we want to work with, right? Right now, most of my investors were back from my multifamily days, right? They were my private lenders, they were my joint venture partners. They were able to burn out their money. So all of their money has been, refinanced out and they're just sitting on money, right? And they were ready to invest in Texas, that development project, but I didn't want to risk their money, right? So that's why it's my duty to really place that money smartly and make sure that, all the risks are mitigated, all of the contingencies have been planned out.
Are you having trouble raising capital for the business side? Because I understand that your current strategy is that you're going to real estate events, talk about the cash flow. It's like it's not sustainable for real estate investor, multifamilies, and all that stuff. And then you try to maybe make some connection over there, maybe potentially to bring some capital to your business acquisition. And then you're doing the other way, go to the local meetup and try to connect with these like business owner who's got a lot of like strong cash flow and get them invest into self-storage development project, right? Is that something that you're trying to do at the current moment, or you're finding that the raising capital process is slightly different?
Great question. So On the self-storage side, as I said, most of my current investors that are ready to go are my past joint venture partners. When I go to these events, I am usually considered a self-storage guy. So I'm the one that's talking about self-storage to these people that don't even own real estate, right? I'm raising money from, new investors in the US who are accredited investors, or, these bigger family offices, institutional investors, or business owners that need to write off, some depreciation with their business, right? They made too much money this year and they're trying to write off some depreciation. But to your point, raising money for business, you don't want to dilute your brand, right? You don't want to dilute your focus. People will be like, oh, why are you so all over the place? So I am very careful about who I share, my short-term cash flow need. And when it comes to buying a business, I don't share that with, to be honest, like anyone that's not my immediate circle, right? So my immediate circle, and also with paying on podcasts like this, we talk a lot about strategies, about what I'm going through. That's why I'm sharing this. But I'm not going to my investors or going to new events to talk about, hey, like, you want to buy a business together? That's definitely not what I'm doing. I'm only sharing that with people that are already in that business. So they know that, the HVAC guy from Alaska, he is looking for HVAC businesses himself as well. So that's where there's the immediate synergy there, right? Or some of my other Canadian friends who are also looking to get their E2 visa. So they need to be a 50-50 owner on the business in order to get that. So those are the people that share immediate synergy, right? But if I'm pitching, oh, like, you want to jump on this business with me to a random investor, they're going to be like, dude, you're all over the place. Like, what are you even talking about, right? So I'm extremely careful, like where I raise money, where I raise equity, purely for my self-storage project, because that's what I know best. That's where I feel like I can be the best fiduciary, responsible person, along with my, CFO, Roderick, to really manage the project from A to Z. And with the team that we have, with the team that we're planning to hire, we feel like we're best suited, to manage other people's money in that capacity, purely for self-storage projects. For, everything else, that's really more of a personal project. And that's where I have, some immediate partners that I don't really advertise a whole lot, right? So
I see. Do you mind sharing a little bit about the local meetups that you attend to raise your capital for self-storage?
yeah, absolutely. Yeah, I love talking about stuff like this. So I recently, well, not quite recent, it was back in February, March. I joined a community. It's called a Fun Launch, Black Card program with Bridger Pennington.
I was in that too. Nice.
Yeah. So if you guys
Awesome.
are in real estate, or if you're doing anything, honestly, what they teach in that mastermind is the concept of funds, right? So set up a fund. For those of you who don't know, it's basically almost like a syndication, but instead of raising money for a single deal, you're raising money into a fund, and you're allocating resources in that fund into multiple deals, right? So instead of, tying up your investors' money into one deal, you have a portfolio of deals that you can diversify, with the fund. So, from that mastermind, there's a lot of, hedge fund guys, a lot of private equity guys, a lot of business owners. There's even a car dealership guy, and they raise a fund to do in-house financing on their used car dealers, on their used cars. So you can literally create a fund for anything, right? If you have an offering, if you have a business plan, it's very easy to connect the dots in that world, because you're solving a real need and you are the best operator for that fund, right? So that's why that's a great circle of influence that I have access to. So from that circle, that's where I got my family office contacts. That's where I started attending these ultra high net worth events, right? I went to this private jet and capital event in Utah, in Salt Lake City, Utah, and just a bunch of family offices. You can only get invited to that event, and there were a bunch of people that were trying to do real estate. They're really good with their hedge fund stuff. They're managing 40-50 million dollars, but they wanted to diversify. Like, they're making a lot of money elsewhere, but they're like, okay, how do I diversify my rent? How do I spread out my revenue streams? And how do I get into something that's way less sexy, way lower returns, but proven to be relatively recession resistant, a lot more consistent returns? And they were looking at self-storage, right? So that's the perfect opportunity where I'm in touch with these higher risk but higher return, profiles. and they're just seeing real estate as something that's super boring, that's relatively safer. So that's a really good angle. I'm also part of the local Chamber of Commerce in Vegas, right? So I'm part of their highest tier of they're called the President Club. So that's where the Las Vegas Raiders, the Golden Knights, all the casinos, they have representatives there, like their C-level executives are in that network. So we have our own private invite only events. That's where for those events I never pitch about what I do. Usually people you meet like the general manager from the Golden Knights, you meet the VP from the Raiders, and you're like, oh shit, like everybody's like fanboying or fangirling them, right? And they're like, who is this Asian dude that's like what does he do even, right? So usually I'm there to really learn, learn about what they do, to understand their challenges, their business needs, or the vision that they have. And whenever they ask me, that's when I talk about, oh, like if you're in a position, my opportunities are not for everyone, right? Like I'm really targeting the accredited investors or businesses that need to invest for depreciation benefits. So that's why I'm trying to think, okay, where do these people go, right? Through these like Chamber of Commerce events, it's a perfect opportunity because a lot of these are small business owners. Another, because I tend to rumble on, but another event that I love going to are these very unique but very interest or passion driven events, such as car auctions. So there's something called Barry Jackson classic car auctions. I'm not sure you guys heard of it, but it's very big in the US. That's where people are buying, a 1968, Ford Mustang for like, 100,000, 150,000, and they're bidding among each other. There's also, a lot of celebrities that go to that. There's a lot of people that are, bidding on these super rare classic cars. So I love going to that. I'm a car guy. I can have a basic conversation about cars, and I just hang out in the lounge, and I don't bid on these cars, but I'll see what people are doing. I'll talk about what they do, and that's how I target some of these investors.
Yeah, I have stuff. I gotta ask you some questions here. It sounds almost like what you're talking about. You're just like, yeah, go out, socialize, make friends. Because it sounds like you're not even pitching people, but you just need to go to things of interest. Like even if you go to events like industry specific, I feel like that one, people will have trouble doing that. Like imagine going to something medical and you have absolutely no background in medical and you're trying to have a conversation. People will definitely wonder what you're there. If you have a contact, it might be a little easier to justify, but you're kind of bearing the lead a little bit in terms of what it is that you're doing there. But you're ultimately making connections, and usually people will work with people that they like. So really, I think correct me if I'm wrong, but it sounds like you're going there and building relationships. And when people have a good feeling about you, but it opens up opportunities. Is that correct?
It's funny because I was having this conversation with this friend of mine that's pretty much following my footstep, right? Like he was doing wholesaling in New Brunswick and he saw I'm doing self-storage. He moved to the freaking US as well. I was like, dude, like I don't, I'm doing this because I'm crazy, but
Stop
like
copying me.
unless I'm not Gwen Cardone, you don't have to follow my footsteps, right? But I honestly feel responsible for his failures or his success. So every single week, we kind of have this phone call, we catch up, and he talks about the challenges he goes through. He was talking about exactly this. So he was asking me, hey, like, Mark, where do you think I should move to? I'm like, first of all, like, why are you looking to move? Are you looking to move because you saw me moving? So, but I was like, if you were to move, I will honestly choose either Vegas or Dallas in Texas or West Palm Beach in Florida. Because this is where, these are all hubs of ultra wealthy people, especially Dallas and Vegas. Super easy to travel in and out of. There's so many events that happen there, right? And it's very easy for you to meet people, for you to be in like growing markets where a lot of people are moving to. So yada yada. And he was asking me, hey, like, how do I raise money if I go to networking events? I was like, dude, like nobody knows who you are. You can't just pull up to an event, pitch yourself, and expect people to write you a check. That's not how that works, right? So I only go to events where I know there's some synergies, right? Like the car events. I love cars. Like if you throw me into a medical event, no matter how much money they make, I know nothing about medical. So like I would literally, really stick out like a sore thumb. But if you throw me into a theater or a movies event, I love, talking about film. I actually took film studies back in college. So I love, the creative process. I love the whole directing, the whole production. So I can talk about that. If you throw me into a car event, I love classic cars. I can talk about cars, and that's where you can build that mutual connection. That's how you can get people to like you. That's how you can start building that trust, right? But if you just go to a high net worth event with nothing in common with them, and you have the sole purpose of trying to raise money, that's just not going to work, right?
Mhm.
So you really have to go in with the mindset that you're looking to, make friends, have fun, really get to know other people, find different ways that you can add value to them, and then see if they're even the right profile, because most of them, they don't really have the disposable income to be able to invest in a project like that, right? Accredited investors, the definition is you need to make at least 200,000 and above as an individual. Most people are not really at that level, right?
Now,
But
how long do you need to attend to these type of events? Make friends, enjoying the time with them, and then figure out if there's enough return of your time for that specific events. Because I'm sure a lot of people go to different events and they were like, we're constantly having that kind of mental battle about doing things more consistently. At some point, we're gonna see some result. Versus if you're doing that 150 to 100 reps and you realize that okay, it's not working out, you gotta pivot. How do you balance between these two?
first of all, like my mindset is nothing is really a waste of time, because there's always a different angle that you can help someone where someone might be able to help you a few years down the line, right? So I can share with you, when I first moved to Vegas, I just started going to these real estate meetups first, right? Because that's what I knew. And then I realized, oh, I don't, I should go to non-real estate events. But even through the real estate meetups, I met, this gentleman, his name is John Lopez. Shout out to John and Nine Doors Down and Anthony and all them. But they taught me about funds. They were like, hey, Martin, like, cool, you're in real estate. We're also in real estate, but we don't really operate anything. I was like, what the hell do you mean, right? I was like, are you a passive investor? Are you a passive lender? I was like, no, not quite. We manage a fund that partner up with operators and we allocate capital to other operators that we screen, that we trust in multifamily and self-storage, right? And I was like, oh, this is amazing. Like, I have this project going on. Like, do you want to invest? They're like, bro, we just met you, right? Basically. So that's like the vibe. So to answer your question, Pink, like throughout, that was last October, last November. For the past year, every time they had a self-storage question, every time they were screening an operator, or every time I'm going to a self-storage event, we'll always keep each other posted, right? They would send me a deal from another operator. They were like, hey, Martin, like, what do you think of this? I would give them my honest, unfiltered feedback. I would literally share them a whole analysis, right? So I slowly build that trust little by little. And then they were like, hey, Martin, like, you probably have a lot of connections in Canada. Would love to raise money in Canada. I was like, no problem. Here are all the masterminds I'm a part of. I'll set up an intro call so you can join. You can consider. Here's my entire, like, my lawyers I work with in Canada, so you can deal with Canadian securities. So I was really in it to provide value consistently, right? Like, essentially they can count on me for everything self-storage, everything Canada, everything, when it comes to, what I know, they know they can count on me and I'm willing to share with them. So from that process, now they're willing to like really work with me, right? Because of that. But when you just first meet someone, they're not able to raise money like that. And when it comes to, non-real estate events, right? If they're just trying to learn about real estate, I will share with them, the resources that I paid for, like tens of thousands of dollars every year for, right? I would just share with them, hey, here's the underwriting tool that my CFO built. He spent like months working on this. It was like version 15. So he literally spent over a year working on, this underwriting tool. I was like, here it is, free of charge. They were trying to learn more about self-storage. I took this valuation course, where I learned about discounted cash flow, where I learned how to do all these very fancy Excel stuff. I paid $2,000 for that. It was a 4-day crash course. And I just sent the entire Google Drive to them.
It sounds very much like the mindset of adding value, and your approach is very altruistic, to be frank. It's good in that sense, and people will value what you just said. Like we've done something similar where we've given out access to courses that we paid for or material, and it's a gesture. It's kind of like giving somebody a gift and they weren't expecting it, and then people remember you. And I think actually what you just mentioned in terms of them calling you or contacting when they have questions. Yeah, earlier you mentioned that that differential knowledge. You want to, I forget what the word you used. It was good, but you said some kind of making sure that you have knowledge arbitrage, I think you said.
Knowledge arbitrage, yeah.
Yeah. So that I think is perfect because you're finding the gap. I have one more question because we've talked a lot about this and I feel like maybe we should move along, but it's one thing for people to go to networking events and make connections. Some people may be good at selling, some people may be good at just building friendships and building rapport. Like for example, a year ago, my brother and I we went to a boat show, right? Because we were interested in boats, so we went there, and of course, we met a lot of people with relatively speaking high net worth, and they were just all very casual, and we made friends. The thing is that I didn't quite know exactly how to capitalize or pique their interest. Like, yes, we can talk about it, but there was a lot of like pretty much retired people. They wanted stuff that was extremely passive. Do you find that there's a commonality with people of, let's say, you talked about accredited investors, 200,000 plus? Like, is there something that they're looking for? An example would be we find some investors are more concerned of return of investment rather than return on investment. And some people are looking for long-term, short-term, not high interest rate returns, but maybe mid-range because they perceive that as lower risk. Like, is there something that you're seeing as a commonality that they're looking for?
I would say there are different tiers, right? If someone is, around 200,000 to 500,000 range of annual income, those people are very different compared to a family office that's trying to place a check for $50 million, right? So very different kind of returns, very different kind of risk profiles, and very different strategies, and even length of investment payback they're looking for. But I would say on my end, I can share with you an example. Like I always, as I said, I go to a lot of these Chamber of Commerce events and I get to meet a lot of these business owners. A common theme for them to even consider investing in real estate passively, right? First of all, they think they can do it themselves as well, right? One of the gentlemen that I met, his name is John. He owns a commercial cleaning company, and his best buddy is his financial advisor. So when I first met them, I was like, oh my God, there's so much synergy. So I did the whole thing where, I was getting to know them, where I was trying to follow up with them. And I did the whole pitch. I talk about my self-storage, talk about my story, and then don't really hear back from them for like weeks, right? Because I was just like very business minded. I was like, all business, like no fun, no pleasure. Like I, kind of share my personal journey a little bit, but didn't really hear from them. They never really responded to my calls. And then I was like, okay, let me, because we're in Vegas, obviously there's so much entertainment, right? I was like, let me invite them to a couple of shows I'm going to, right? So I started inviting them to like, basketball games, started investing them to like circus shows. So they said no a couple of times, but then the second and third time they were like, hey, like, sure, yeah, actually we can make it work. And then I hang out with them a couple of times, right? Different setting, so non-business setting where I really try to connect with them. I even met John's son. And then after the third hangout session, he basically shared with me that he pretty much thought I was all bogus. Like he was like, yeah, like what you talked about, real estate, passive investing. I just, he didn't understand it. He's never done it. So he just was really thrown off by it. And obviously he wasn't going to write a check. But it wasn't until when we spent some personal time together and where he really saw what I was about, right? I had my interest, I care about basketball, and I really like to have a good time. We bought a few beers and then he bought me, some burgers. And we're just, hanging out as dudes, right? And I met his son, he saw how he interacted with the son. That's where like, the guard really drops. And that's where he really shared with me what he was looking for, right? And the kind of challenges that he had. So that's where you can really build a more intimate connection. And that goes the same with all of my joint venture partners. I feel like I took my joint venture partners for granted. I was like, oh, it was so easy for me to raise money. Well, no, those were some of my friends from college. And some of the other investors, they were following me for a month, for over a year, right, on my YouTube channel. So they saw how hard I worked. So they trusted me. They knew of the market. They knew of the deal. So when you're trying to tap into, these investors, trying to raise money, trying to solve a problem for these non-real estate people, but ultra high net worth people, you really have to build that intimate, connection. You really have to, build that trust gradually, and you can't really force it, right? And sometimes you just don't vibe with someone, right? Like I went to that private jet event. I would say only about 20% of the room were people I would actually, hang out with. Like most of them, they would just never even want to hang out with me and vice versa, right? So you can't force it. Have the mentality that you're trying to add value, as you said, Andrew, but at the same time, like you better like your partner. Like you can't really fake a relationship, right? But yeah, I will say that's my biggest takeaway. That's my personal experience.
Yeah, going without any expectation first, right? Give, and at some point, if there's a collaboration, great, you do business together, right?
I have one last question, at least before we shift from that. Like, do you go to events and do you speak at other events that have nothing to do with real estate to talk about real estate? Do you do like a panel session, or do you like do a small speaker session? Like, you will go to this events not always as an attendee, but sometimes to speak, correct?
Correct. Yeah. So far, I have only spoken at real estate events. My goal for next year is going to, speak at non-real estate events as well about, commercial real estate and depreciation benefits.
Okay, so my question is, like actually, I'll be frank with you. This year, this coming year especially, one of my goals is I'm trying to put myself out there more. I've been focusing a lot inwards. I've been like, we've been building up our own brand, and so there's a lot of internal and back end focus. And this year, now that we have everything running a little bit smoothly, I want to be putting myself out there. And I have thought about branching out into non-real estate stuff because, for lack of a better way to say it, you go to real estate events, it is like everybody's looking for the same thing. It's a little incestuous, it doesn't quite work. I feel like people go there, and I feel like the only thing worth sharing there is like people who understand problems, maybe have creative solutions to industry specific problems, and education. That's what they're for. You're building your network, but the things that we actually need, we'll probably find them somewhere else. So how are you approaching getting onto panels at other events? How are you approaching speaking at other events? Like, how are you building those connections and getting invited? Or I know some people pay to go to speak at other events. What is your approach there?
If you're in Moncton, New Brunswick, it's gonna be a little tougher, right? Because the circle is so small and there just simply not that many events. But when I moved to Vegas, the difference was obviously night and day, right? So I joined the Chamber of Commerce right away. I did actually speak at their events quite a few times actually. So where people, there was a panel where people were kind of talking about different industries. So I talk about real estate, I talk about self-storage industry. And most people, their feedback was like, oh, I never thought self-storage facility were that profitable. People don't even think twice about it, right? They'll drive by it and they're like, what the hell? Like, that's how much money they're making. Just little nuggets like that. Where I would talk about the project that we're doing in Texas and how that's different from people's normal understanding or basic understanding of real estate investing, where people just think real estate investing is buying your first condo, buying your first house, whatever, right? So it's like stuff that you and I, we already know, but to them, it's like groundbreaking information, right? So I would say, first of all, like, be in the city where there's just a lot of events and put yourself in circles where you can be considered a subject expert in whatever that you're doing, whether that's wholesaling, Airbnb, whatever, short-term rental, self-storage. So for me, it was through the Chamber of Commerce, right? But secondly, a more aggressive approach, right? Andrew, like, I don't know what you're looking for on your end, but what I'm looking for are more, investors that or businesses that are looking to, place capital into these self-storage deals, right? So a personal project that I've been working on, for about a month and a half now, and we're looking to launch it in December. It's actually a podcast platform where I interview business owners on how they can scale from their 7-figure business to an 8-figure to a 9-figure business. So to really learn about the challenges they go through, because a lot of us have already easily, hit that 7-figure mark, right? But to really make a business past 8-figure, that takes another level of systems. That takes another level of dedication, and they have their own unique challenges. So I'm starting this podcast, as a personal research project for myself, but also at the same time to really build that one-on-one relationship, right? To give me a reason to reach out to these successful business owners, to force them to spend an hour with me. You guys just forced me to spend over an hour with, I already like Ping, but Andrew, like, from the way that, I interact with you, I know I want to get to know you more because you ask really insightful questions, right? So I'm looking to create a same experience, but with people that are worth, tens of millions of dollars, right? So I think that's gonna, produce a lot of great content, but at the same time, that just gives them a reason to spend time with me. Prime example, like obviously I reach out to a bunch of my existing friends that are doing quite well in wholesaling, real estate, whatever in Canada. But at the same time, reaching out to like local Vegas Chamber of Commerce people and also local business owners I know of. Like one of the guys, he's one of the biggest real estate agents in Vegas. You know, his entire team, they have a bunch of Lambos, G-Wagons. It's all branded, with their group. And I'm also, this dealership guy, he owns like literally, I think it's America's biggest Alfa Romeo dealership. And it's right here in Vegas. They have a bunch of, luxury brands as well. So I reached out to that guy asking about, hey, like, how did you scale past the 7-figure mark, right? So those are the perfect profiles that actually likely have the need of writing off some of their, business income into commercial real estate. And by spending an hour with me, hopefully they will get to know me. Hopefully they will care to learn about what I do, right? So that's another angle where it's another creative way for me to put myself in front of them.
Hey, by the way, last question about more like a personal question. How do you have so much energy going to so many different local events? I always find that very exhausting.
Yeah, man. I mean, first of all, I don't have kids, right? So paying that's but secondly, you know what? Like it's funny. My best friend, he was, in the wedding party at my wedding, Roderick. He came down for a trade show for self-storage. He spent a week with me. And he was kind of half joking, but he was basically going to all the events with me. He was like, okay, Martin, I understand why Lynn and you didn't work out. I was like, oh shit. He was basically, Martin, your life is fucking crazy. Like you just, I don't know how you do this like every single day, right? I think for me, I genuinely enjoy connecting with people. I genuinely enjoy adding value to them. I also really like the events I go to. Like when I made that move to Vegas, I genuinely was like very excited, right, to explore, to go out there. There are obviously days where I'm just like, feeling like a couch potato and I don't really want to do anything. But I get that, it's almost like an extrovert break, right? I recharge my energy by connecting with people, by talking about what I do, by adding value to them, by seeing their facial expression when I talk about, hey, like this is like, did you know these REITs, like you see Extra Space or CubeSmart, it doesn't mean they own them. They're usually just the property managers. Where I love to blow their mind when I tell them 70% of the self-storage facilities are actually owned by mom and pop operators. Like the bigger guys, they only own combined 30% of the entire market. So like little stuff like that, right? Just adding value, like little tidbits to people and trying to spread my seed, spread my value, and really nurture that connection, taking them out to shows. I genuinely really enjoy that. So yeah, I would say that's why I'm just built a little different.
Yeah, it sounds like you're maintaining a genuineness of yourself, because some people I know that they go out and they put something on, and I imagine that's exhausting. Even when we start making videos, when you start recording, like right now we've gotten pretty comfortable in terms of having like an easy conversation. We're not putting it on, but I know that people, especially when they start off, or if they're not so inclined, they're on, and being on is tiring. So I think if you're going out and you're being yourself, it shouldn't be so tiring.
Yeah, I will also say like a lot of my friends were allies in business, and also my friends were asking me, hey, like if you're struggling to make cash, like why don't you just go back to New Brunswick and go back to wholesaling or flipping, right? I'll say, well, I genuinely lost my interest in that market after seeing what happened with the regulations, after seeing what happened when they changed up the tenancy laws, and also I just don't think it's as attractive as a market anymore. I also don't believe in the asset type anymore, right? So you can't force me to do anything. I feel like it really has to come from the bottom of my heart. So from the bottom of my heart, I genuinely think self-storage, mobile home parks, phenomenal businesses. Self-storage makes more sense in the US. Mobile home parks make more sense in Canada because of the housing prices and just how much, how many more immigrants that we have. So like I genuinely talk about that. I go to parties and I talk about that. And that's why I don't get invited to parties either. Like people are just like, why fuck do you care to talk about real estate all the time? I'm like, I genuinely love talking about this, right? And I genuinely lost my interest in New Brunswick. So I stopped talking about New Brunswick altogether. I definitely believe in that. And people can see it, right?
It's like a spark in your eye when you talk about it. So if people can see that spark, there's something very captivating about it.
Yeah, no, I appreciate it.
Okay. Peng, what do you feel like? Do you feel like we should be wrapping it up here? I feel like we have forced you to talk to us for a long time.
Here's the thing, if each topic, because I'm making notes as you're talking, right? If we actually go into each topic in depth, we can talk for hours. That's just the truth. So, and then obviously, I would be very interested in knowing about your mentalities and all that stuff, or your upbringings and all that stuff. But we'll probably do a part two for this one. Yeah.
We'll do a part two if I make it.
Yeah. Okay. Awesome. Martin, thank you so much. And then yeah, hit me up when you actually have a trip planned to Toronto. Let's meet up.
Will do. Absolutely. Thank you guys. I appreciate your time. I'll
Okay.
talk very soon, okay?
Awesome.
Yeah,
Okay.
sounds good. Have a good one.